What happens when two of Canada's most watched cities, Toronto and Calgary, move in completely opposite directions? In one corner, the Greater Toronto Area GTA is seeing its strongest sales activity since 2021, even as prices drop. In the other, Calgary is slowing down after a multi-year run, with inventory surging and sales sliding. Add to that a national market that's settling into more balanced conditions, and you've got a Canadian real estate story that's far more nuanced than a simple up or down. Let's break down the latest data, region by region, and see what it really means for buyers, sellers, and investors. Greater Toronto Area, sales heat up. Prices cool down. The GTA's July 2025 numbers are attention-grabbing for two reasons. Sales volume surged 10.9% year-over-year to 6,100 transactions, the best July since 2021. Average home prices fell 5.5% year-over-year, providing a rare moment of improved affordability in one of the country's most expensive housing markets. What's driving the GTA's rebound in sales? Lower mortgage rates, with 5-year fixed rates easing into the low 5% range. More buyers are re-entering the market. Pent-up demand. Buyers who stayed on the sidelines during 2023. 2024's rate hikes are finally making moves. Better affordability. A 5.5% price drop in a market like Toronto means potential savings of tens of thousands of dollars. Why prices are still sliding while more homes are selling? Sellers have had to price competitively to attract those buyers. Higher inventory than in 2021 to 2022, coupled with cautious consumer sentiment, means bidding wars are less common, and negotiations are back on the table. Key takeaway: the GTA is a market where buyers are starting to regain some leverage. Though competition remains in high-demand pockets like central Toronto and parts of Mississauga. Calgary, inventory surges, sales slow. Calgary has been one of Canada's brightest real estate stories in recent years, benefiting from immigration from other provinces, strong employment numbers, and relatively affordable prices compared to Toronto or Vancouver. But July 2025 shows signs of cooling. Home sales dropped 12%. Year-over-year, inventory jumped 66%, the largest year-over-year increase in years. Benchmark prices fell 3.9%, though average and median prices saw slight month-to-month gains. Why the shift? More supply. New listings are flooding the market, partly from investors cashing in on recent gains and partly from homeowners looking to downsize or relocate. Slower immigration growth, while Alberta is still attracting new residents. The pace has moderated compared to the 2021 to 2023 surge. Buyers taking their time, with more choices. Buyers are less pressured to make quick offers. Calgary remains relatively affordable. Its benchmark home price is still well below the national average, but the jump in supply suggests a transition toward a buyer's market could be coming if sales don't rebound. The national picture: gradual cooling, balanced conditions emerging. Zooming out, Canada's housing market is showing signs of broad stabilization. Average national home price, see $698.00 in June 2025, down 3.7% year-over-year. Condo prices, down 5.2%, reflecting softer demand in urban high-rise markets. Average rents declined 1.6%, suggesting rental markets are also finding balance after years of double-digit increases. This national shift toward balanced conditions is being driven by more listings. Increased housing supply in several provinces is reducing the intense competition of the past few years. Steadier demand, lower mortgage rates are helping, but economic uncertainty and tighter budgets keep demand from overheating. Policy measures, government housing initiatives, and municipal incentives are slowly beginning to influence supply pipelines. Regional contrasts, a tale of two markets. Canada's real estate market is increasingly regional, meaning national averages can be misleading. Markets heating up: GTA, parts of Atlantic Canada, Halifax, Moncton, and select mid-sized Ontario cities are seeing renewed buyer activity. Markets cooling: Calgary, parts of BC's interior, and pandemic-era boomtowns like Kelowna and Prince Edward County are seeing slower sales and rising inventory. This patchwork landscape means timing the market will look very different, depending on where you live or where you plan to buy. What this means for buyers and sellers: for buyers in Toronto, you might finally have room to negotiate, especially on properties that have been sitting for a few weeks. In Calgary, The growing inventory means more options and possibly better deals in the coming months. Nationally, mortgage rate cuts may improve affordability slightly, but don't expect dramatic drops in carrying costs unless rates fall further. For sellers in hotter markets, correct pricing is still critical. Even in the GTA's active July, overpriced homes lingered. In cooling markets, be prepared for longer listing periods and more competition from other sellers. The road to 2026, with CMHC and other analysts predicting price stabilization in 2026. The current market appears to be in a reset phase, finding equilibrium after years of swings in both directions. Toronto may continue to see strong sales if mortgage rates ease further, but price growth will likely remain modest. Calgary could stabilize if demand picks back up or if inventory growth slows. Nationally, buyers and sellers are adjusting to a more balanced, less speculative market that could be healthy for long-term affordability. Final thoughts. The takeaway for 2025 buyers and sellers. The Canadian housing market in 2025 is a study in contrast. Toronto is hot for sales, but cooler on prices. Calgary is seeing slower sales, but still holding value in the short term. Nationally, the frenzy of the early 2020s has given way to a calmer, more balanced environment. For those looking to make a move, the key is understanding your local market's dynamics, because the difference between Toronto's bidding activity and Calgary's slower pace could mean very different strategies for success. Your turn. If you had to buy right now, would you choose a market with falling prices but high sales like Toronto, or one with more inventory and slower sales like Calgary? Let me know your take in the comments.